One.
Hello, everybody, and thank you very much for joining today's Digital Euro Association's event. We have another webinar with really excellent and distinguished speakers, and today we discuss the topic of privacy and CBDCs. Before we go into the content and into the topic of today, I would like to very briefly introduce the Digital Euro Association to you, which is the organization that organizes this event today, which is a think tank around digital money. So basically focusing on the digital euro and meaning central bank digital currencies and also stablecoins. And what we basically do is we address this topic from a few different angles. So we want to do research in this field. We also want to bring people together. So we have basically three different pillars we rely on. First one, education. This is also why we meet today, right? Because there is so much stuff going on in the digital currency space, especially around the digital euro. So it's really necessary to talk about it with experts, to think about it, and to really address all these various facets this topic brings. So we host events like today. We also have our own podcast, which we started a few weeks ago. We also have other interactive webinars and panel discussions. And in the near future, we also hope to provide some research in the form of short papers or reports. Besides that, we are building a community around digital money. We are really thrilled that to date, almost 300 people and companies joined the Digital Euro Association. So we are really thrilled by that, to have great experts, so individuals on board, but also companies, which really makes this think tank kind of unique. And by bringing all these people together in this Digital Euro Association community, we of course also want to foster collaborations. So we want to bring very similar minded people together, maybe one, for example, developing a product around digital money, the other one being a lawyer in this field, for example, right? So we really want to bridge this gap, because it's really not that easy to basically come together with peers, to connect, to collaborate. And this is also something the Digital Euro Association wants to facilitate. We have different ways where people can participate. So I think for everybody here in the audience, there is some way, if you're interested, to engage. First, and the most easy thing, I guess, is the newsletter. So we have a monthly newsletter. We are very happy to share into the YouTube chat as well. If you are an individual, you can also apply as a DEA fellow or a DEA expert. So depending on your level of knowledge in this field, so that you are also as an individual affiliated with the DEA. And for companies, we have the opportunity to be an active member, where you participate in our working groups, so where you are really actively engaged and do basically hands-on work. Or we also have the possibility that you can join us as a supporting member, where you are affiliated with the DEA and you are a partner of our events. We also provide some branding experiences. So this is like the offers we currently have. And if you're interested in any of this, of course, feel free to reach out to us. We have different opportunities. And for today, I want to explicitly thank our supporting members. Without their help, this initiative wouldn't be possible, which is the Bundesdruckerei, the Frankfurt School Blockchain Center, and also C-Labs with the Celo Euro. They have been launched. So thank you all for the support. And if you're interested in this initiative, just visit our websites, or you can follow us on LinkedIn, on Twitter. We are quite active in this space. And we are also very, very happy to receive any emails. So if you're interested in becoming a member, a fellow, then please reach out to us, and we are very, very happy to talk to you and discuss maybe also potential collaborations. Right, so for that's actually it. So I wanted to keep the introduction of the Digital Euro Association quite short. I'm really, really thrilled that so many people have joined today, and I think this is a really important topic we currently discuss. And I think, yeah, way more dialogues and discussions have to be undertaken when it comes to this aspect of privacy, because we have currently seen that almost all central banks worldwide look into CBDCs. Most of them are currently doing research, but a few of them are also piloting. The Bahamas actually was the first to already launch, so they are live. But the most of the work and the focus currently really goes about the design. So how should a CBDC design? Which features should a CBDC have? Which use cases should it address? And one very, very essential design dimension is the aspect of privacy, because a CBDC can be designed in a very private way, or it can be designed in a very transparent way. So technology in the end provides both extremes, right? It could also be something in the middle. And so I'm really happy to have two very distinguished people with me today, which is first of all, Dr. Thomas Moser, who is working for the Swiss National Bank and also doing extensive research on this aspect of CBDC, also of the underlying technologies and also of privacy. We will hear more from Thomas in just a second. And then I'm also very happy to welcome Mr. Wolfram Seidemann, who is CEO of Giesecke and Devrient technology unit, who's like more, I think, in the practice compared to myself and Thomas. So who's also has already kind of developed a product around CBDC. And I'm very happy to have these great people today. Also later on, David Teseo Lucas as the moderator. But yeah, let's now go into the topic of today. And maybe as a very last announcement, it's really the last one, I promise. We have kind of created the Slido room for you. So if you have any questions, please, we have a Q&A session afterwards. So please, every question you have, raise the question here via Slido. So you have two possibilities to engage with Slido. You can first scan the QR code here. Or this is what you can do, just scan it. And the second, you can go to www.slido.com and you can insert the code for today, which is 339339. And then you can also access the room and you can type in your question. And if this is a question which is for one specific person, please also indicate this person. Right, so without further ado, I would now hand over to Thomas, who will present like his concept of how to preserve privacy with a CBDC. Afterwards, I will follow with my presentation of some research I did. Afterwards, we engage into the panel discussion. And last but not least, we have a Q&A session. So thanks for your attention. And now I'm very happy to hand over to you, Thomas, and I'm very looking forward to your presentation.
Thank you very much, Jonas. Great initiative. And as you said, I think it's an important topic, privacy. I try to share my screen. I hope you can see it.
Yes.
So thank you. This is as Jonas said, it's more of a research paper that we did. It's a working paper that has been issued at the Swiss National Bank. You can download it there if you're interested in. It's together with David Chaum. David Chaum is a very well-known cryptographer and actually the person who came up with the idea to link cryptography to money in the 1980s. Unfortunately, never really took off, but he really was, I would say, the first one to come up with this idea. So he took him on board. Then Christian Grotthof has actually implemented what we are showing you. His work on this came out of a project that he did, that actually a PhD student of his did, Florian Dold. He's quoted, his dissertation is also referenced in our paper. And when I came to it, I really said, let's set that up as a CBDC, because originally it was set up as something that a commercial bank could use, but we put it into a setup of a CBDC. So what I want to show you is basically how the privacy works, because that's what's important. So this would be a privacy preserving CBDC. So at the very high level, it's token based. I know there is a big discussion whether token versus account makes sense in the digital space. Some people say it doesn't, mainly because economists and computer science people use the term token differently. But by token based, I mean there are no accounts involved. So there are no identities stored anywhere. It's centrally issued. It's not a DLT. So that makes it easier to get privacy. And also it makes it very easily scalable. So Christian has, as I said, implemented it, he tested it, and he came to the conclusion that the cost of the system at scale would be, as you can see, 0.001 euro per transaction. So very cheap, actually, just as cheap as a transaction in a real-time gross settlement system of a central bank, or at least a Swiss one would be now. So very cheap and extremely scalable, given that it's centrally issued. It's designed so that it really simulates a banknote. It has a privacy that is guaranteed. It's not promised, it's guaranteed, so that the user has everything in her hand. It's quantum resistant simply because there is no information stored anywhere. You will see that for the payer, but it's not private and not anonymous for the one receiving the money. And that has to do with compliance. And I will show you how that's solved, because the big problem, of course, for a CBDC is how do you balance privacy and compliance with anti-money laundering, counterfeiting terrorism, know your customer? How do you bring those two things together? And then finally, but we also think it's important, it's open source software. So everyone can see the source code. You can see exactly what's going on. There are no hidden things in there. It's software only. And it's actually more than open source. It's FLOSS, it's free, libre, and open source software, which means everyone can use it for free. Everyone can change it for free. You cannot license it. You can use it, change it, not license it. It's a GNU project. And those of you who are familiar with, for instance, the statistics package R is also a GNU project. So the implementation that Christian did is a GNU project. It's called GNU Talo. Maybe just one more word on how it's related to David Chaum's eCash system. For those of you who are old enough to remember it, as I said, 1983, he came up with this idea. The changes or the improvements on that system. So the privacy works exactly how David basically invented it, but the improvements are that in his system the coins were not. So you always had to have the exact coin. You couldn't have a fraction of a coin. So this is changed here. The protocol allows divisibility of coins. And one tricky thing that Florian Dold solved in his dissertation is how do you give change without breaking privacy? And that's done with a very clever key exchange protocol. But so that's one of the improvements. You can give change without breaking privacy. The other question was, like, a transaction can fail. You can have a network outage, something cannot work properly. How do you make sure that if the transaction doesn't go through, that you get the funds back without breaking privacy? So that's solved here. And then finally, as I said, the question, how do you combine privacy with the compliance, with anti-money laundering and so on? And we do that through architecture, through a two-tier system. So what happens is that the central bank will publish on the website, for instance, different public keys for different denominations. So you have to imagine that the central bank would say, okay, we have, this is the public key for €1 coins, this is the public key for €5 coins, this is the public key for 10, and so on. So what happens is now Alice, she can now choose one of these denomination keys, and she can create now a coin based on this denomination. That means she creates a key pair, both a private and a public key, which is the coin. So it's Alice, it's the user who creates the coin. Then when she has those key pairs, she does something that David actually invented, namely the blind signatures. She blinds the coin with a blinding factor. She chooses the factor and she blinds the coin. Sometimes we got the question, like, how do you make sure that the central bank does the blinding properly? We don't have to make sure that, because it's the user who blinds it. So everything is in the hands of Alice. She blinds the coin. She sends it basically to the central bank for blind signature, and the central bank signs the coin without seeing, you can imagine, without seeing the serial number of the coin. And that's the important thing. And we do that actually intermediated through a commercial bank for the main reason that the commercial bank does the checks on know your customer, anti-money laundering, and so on, just like nowadays. So this is not coded, the compliance, but it is delegated to the intermediary. And as I said, it's like a banknote. If you get cash from an ATM, you get it from your bank account. And that's the same thing here. You basically get your CBDC by withdrawing it from your bank account, so the bank knows who you are. So the bank takes care of KYC, AML, CFT. and the contact between the commercial bank and the central bank is really in the background. But now the central bank signs the blinded coin. Neither the commercial bank nor the central bank know the serial number of that coin. Alice gets that back, and then Alice unblinds the coin. So she's the only one who knows the serial number of her coin. Now she can pay Bob anonymously, because as I said, neither Bank A nor the central bank know who is connected to that coin. And the coin, unlike in Bitcoin, where the public key is basically your identity, or you could say your account on the ledger, here the public key is the coin itself. And Alice has access to that coin through her private key, and she can sign off that coin to Bob totally anonymously, because no one will be able to connect that coin to her. Now, how do you prevent double spending if you don't have a ledger? That's the other thing that David had to solve. And basically it's through incentives. I mean, Alice could now turn around and pay several times with that coin. That's why, first of all, of course, Bob checks the signature of the central bank that it's valid. And then he has an incentive to deposit the coin, because if he deposits the coin, then the bank will check whether this coin has already been spent before. So the double spending is done by checking whether this coin has already been used before. So no one knows that that coin came from Alice, but you could say if the same coin has been used in a different transaction before, that's why Bob deposits it. Now you could say, I mean, there's no technical need for Bob to deposit it. If Bob would be the son of Alice and he can trust Alice, then of course there would be no need to immediately deposit it. So you could give that coin to your child. The child doesn't have to spend it immediately. But if they don't know each other, of course, Bob will deposit the coin. That also takes care of know your customer, anti-money laundering, and so on. So the fact that he received the coin is totally transparent to the system, but no one knows what Alice did, what she bought. No one knows that it was Alice that bought something from Bob. So that the spending is totally anonymous. And what the central bank does, as I said, the central bank, the only thing that they have is a list of the coins that have already been spent. So each coin can only be spent once. The central bank checks the new coin against the list of coins. If it has already been spent, then Bob will get the message immediately. That's all within a second. We'll get immediately the message not valid. But if the coin has not been spent before, then he will deposit it and it will be okay. The central bank will put this new serial number on the list of spent coins so that Alice cannot spend that coin twice. But as you can also see, the central bank, the only thing that the central bank has is a list of spent coins. There is no name attached to it, no identity. No one can connect that coin with Alice. So that's the privacy concept. And with that, let me give back to you, Jonas.
Yeah, thank you very much, Thomas, for presenting your concept really also, briefly, but really precisely how you enable privacy, or even more actually anonymity. So thank you very much. We also have put your paper into the YouTube chat. So whoever wants to read more about the paper can just do this by clicking on the link in YouTube. And we also have received some first questions. So this is actually really good. So thanks for these questions. What I would now do is I would continue with the presentation of the concept we've basically developed, which is kind of different, but also to address one question which has been raised. The session today will be recorded, so it's live streamed on YouTube, and it will also remain on YouTube. So just this to address one question which has appeared just a second ago. Right, so now I'm taking over again for the next, also very short time, maybe 10 to 15 minutes, to say how we design a concept, because this was really inspiring what Thomas together with Christian Grotthof and also David Chaum did. But we decided in the end to use a kind of stimulus system, but also a system that works in a completely different way. You will understand why in just a second. And to say this is a joint work with a few of my very distinguished colleagues, for example, Matthias Babel, Benjamin Schellinger, Johannes Sedlmeir from the University of Bayreuth, Germany, and also Alexander Bechtel, who is at the University of St. Gallen. So it was actually us developing it. Yeah, so I have structured the short presentation in two parts. First, I want to take a slight step back and talk about why privacy matters. So why I personally think that a CBDC should address this need for privacy. Also something we will for sure discuss later on in the panel. And as a second point, I will then turn to our proposal, how we decided, again, also on a high level. So why privacy for payment matters? I think there are a few reasons and really important reasons. And I put here basically from my perspective, three most important ones. The first one is that privacy itself constitutes a fundamental civil right. So it's something which is, it's written in law that there should be a fundamental right to privacy and that privacy has to be preserved. And here's just as a few norms, for example, the United Nations Declaration of Human Rights, or also the Convention for the Protection of Human Rights and Fundamental Freedoms, just to name a few, right? So it's basically something that's written in law people have to have. But there are, of course, other reasons. One I think is really important is that privacy first prevents surveillance abuses and also the restriction of transactions of specific individuals. Because if a specific transaction cannot really be assigned to one particular person, you do not know which ethnicity this person has, with which gender, etc. So there is really no information where the person can be identified and also can, in some scenarios, be restricted. I'm, of course, not claiming that this is the case in an advanced economy, but what we have seen is that this is unfortunately still today in some countries reality. And I think for these countries, even more than for us, this is a really important aspect why privacy should be preserved. And also when it later comes to surveil people to see which transactions they in the end conducted. If there is a very high degree of privacy in the payment system, there is no possibility to draw any conclusions when it comes to who basically owns the fund and who conducted any transactions. And the last point I would bring here today is that privacy protects users from data exploitation by third parties, for example, payment service provider, and also by data leaks. So again, what I mean by that, if this transaction data is not linked to a person, of course, this data cannot really be analyzed. So in a sense that they can be later on maybe also sold or monetized by some third party, which I think is, at least for a person that likes to have privacy, an important aspect. And we've also seen in the very near past that there have been quite several attempts that also data leaks have occurred. So which means, for example, we had the fact that some email providers basically lost or have been hacked and some data were available online from millions of people, or also some credit card information available online. Of course, this is an issue, but hackers are really smart. And I think there is really no way to have a payment system that has a really, kind of a likelihood of 0.000% to be hacked. So another approach would be to just not store data, which can be exploited and make sense of, right? And this is why I also would vote for a very high degree of privacy, because then if somebody hacks the system, he sees some randomly looking numbers, or for example with Thomas maybe sees some serial number, but he doesn't know who owns the serial number, so it cannot do anything with it. And this is, as I said, also a very important aspect of privacy. And all these points basically hold for privacy in general, but what's about financial transactions? And I think here privacy is even more essential because transaction data are really confidential. So of course, it depends on your mentality, also on your country. But at least when I'm thinking here about Germany, money and payments and salary is a really confidential topic. You're not talking about on your daily life with your neighbor, etc. And so this is something which has been secured even more. And therefore, I think also in the payment space, privacy has to be ensured. And now people could argue, well, but we have cash today and cash is perfectly private. It's anonymous. No third party knows anything about the transaction. No bank, no central bank, no service provider. And this is true. But the thing is, we also observe that the use of cash as a means of payments is declining in most economies. So even if central banks, of course, do not want to abolish cash, and I totally believe that, we see this market-driven trend that, for example, in some of the Nordics countries, as Sweden or also in China, cash is partly not even accepted anymore as a means of payment, which means also privacy, anonymity is kind of fading away. And therefore, I think even if today we don't need this privacy like now, but I think we might demand this in 10, 15, I don't know, want to put a timestamp here, but in a few decades where cash at least could be kind of marginalized when it comes at least to a means of payment. Store of value is another aspect. Right, and what we have also seen is that European citizens like to have privacy. So this is statistics basically stemming from the consultation that the ECB did. So they started and asked the euro area people which features the digital euro should have. So what's most important? And here the most important feature with a very strong position was privacy, which with an average 43%. So this shows that European citizens, even very diversely distributed across countries, as you see here, kind of demand privacy. And I think this, if you're not convinced by the first slide, like this is again, as a central banker, a reason why you should look into it, because you ask people what they want. They say they want privacy. And then in the end, of course, you now also have to look into how you can reach this. And this is how this is a system that Thomas designed for privacy preserving CBDC. And now I would like to present the concept we have basically came up when it comes to this privacy preserving CBDC. So here again, we want to reach a system that ensures full data privacy for CBDC up until to a specific threshold. So this means that until a specific threshold, all transaction data are fully private. That means that no bank, no central bank, no regulatory authority learns anything about who the sender of a fund, for example, is, right? So this is really essential. This is how we define this full privacy. So this is the privacy, also as Thomas said it, very similar to the privacy today we have with cash. And since we don't have a trusted or a third party to rely on when it comes to privacy, this basically means that we have to rely on some kind of tool to be used. And here, as Thomas, we use a cryptographic approach. With the concept we have heard about, this uses blind signatures invented by David Chaum. We use another innovation, which is so-called zero-knowledge proofs, you might have heard about, which is a cryptographic technique, for example, used in some privacy coins, as for example, Zcash. And we use this zero-knowledge proofs to kind of establish the privacy in this context. As also the first concept, we are not based on a DLT, so we use a centralized ledger. However, here also, if there is a central bank that has a use case for a DLT-based CBDC, it could also work on a distributed ledger instead of a centralized one. But how does it work? Basically, in our system, as with the system Thomas just described, there is like something we label trustless privacy. So there is really no possibility for the central bank to learn anything about the data. So you don't even have to trust the central bank that it's not looking into the data. There is just not a way to interpret them in a useful manner. How is this ensured? For a fully private transaction, this is assured as follows, because the transaction parties involved, they don't send like what's the amount of money and to whom should I send to the central bank. So as it maybe is today the case with commercial banks when they process transactions, they only send a proof of some rules. So how it works is, for example, when I send some money to Thomas, I would propose a transaction and he would propose a counter transaction. So for me, I would propose, please decrease my balance by 100 and increase Thomas's balance by 100. But we do not reveal this to the central bank. We only reveal that the difference is the same. So we are not kind of create money out of thin air and that we comply to the rules of the system. So this means that the central bank knows no details of the transaction, but just the proofs from our side that we comply to the rules, that we do not create any money, and that the delta, for example, is the same. Okay, so this is how we ensure privacy, of course, in a different way as Thomas. When it comes to compliance, this is, of course, really essential because we don't want to have a payment system that is fully anonymous, because in this sense, you cannot detect any illicit activities when it comes to anti-money laundering or anti-terror financing. But as we do not kind of have this data aggregated and interpreted by the first party, we kind of outsource the compliance component to the end user. So this means that before a user wants to do a transaction, he has to prove, again, zero knowledge proof, has to prove that he is, for example, not exceeding the limit. So this means, again, remember, we have a threshold approach that you have anonymous transactions until a specific limit. So the user has to prove that he or she is below the limit. And it also, for example, has to prove that he or she has a valid ID. And we use this digital ID because we want that every user can only open up one account. Because if a user could open up more than one account, then he could also spend these limits way more often than once, right? And this was would kind of dilute the strength of this limit. And this is why we link this to a digital ID. It would also work in another way if you say, well, this is something I will not talk about today. Right, so last but not least, let's take a look at the architecture. So in our system, we have the central bank obviously issuing the CBDC, right? Because it's central bank money. And we have two payment rails. So in the middle, we have the private CBDC, which is the one I just described, where you can transact in a fully private way. And this is done as follows, that the two transaction parties make a transaction proposal and a counter proposal and prove that they have complied to the rules, that no money has been created, etc. And the central bank has the task to check the proof, which is quite easy. So it's not resource intensive. This can be done easily. And if the proofs are then validated, then the central bank adds this entry to the database. And this is how a transaction is settled. Besides this private solution, there is also this transparent CBDC you see on the right-hand side. And this transaction happens if a specific limit is exceeded. So if you do not have any budget anymore to transact fully privately, then you can do the transparent payment. And this transparent payment is very similar to how payments today work with credit cards or something. Here, the bank, in our case, a payment service provider, is involved, and the bank knows who owns the account. So here you do not have a strong degree of privacy, but this is fine because we said we wanted to have this threshold approach, and we thus meaning that we also want to have the opportunity to be fully private on the one hand side, but also to fight illicit activities on the other hand side, right? And just to add, we also have the possibility to do semi-private transactions. So for example, if you want to think about a merchant, when you go to a merchant and pay, there could be the need for the regulator that the merchant, because he's collecting so much money, that the person would actually not should be private. And here it's the case that a merchant can also be transparent, but the one transaction side can be private. So this is something which is also feasible. And to get money, which you can spend privately, you can either go into the transparent way, so that you do transactions from the transparent side to the privacy pool. Or the second alternative would be to use some kind of specific ATM where you can convert cash into CBDC. This might seem a little bit odd to you at first hand, but the interesting thing is that in China, they are currently testing with their CBDC solution such setups so that you can convert cash directly into CBDC. So this is something we could also in the near future see in some other jurisdictions as well. Last, when we think about the user, it's kind of the case that the user owns a digital wallet. And with the digital wallet, he has to prove that he owns a digital ID. And in the wallet, he does all the local accounting. So in this wallet itself, there is all the transaction information recorded. But as I said, not all information are shared with the central bank, but only the proofs. So this means that the central bank only sees the proof of the transaction, but it does not see the exact transaction detail, transaction partner, etc., which makes the proposal kind of private. Yeah, so this just as a very rough overview over the approach we kind of suggest. So we do not have this kind of operating as Thomas did, or also the proposal Wolfram Seidemann is presenting in the panel. So this has been just a concept, but we are very happy that we are also actively engaged with some central banks that liked our approach, and to see if we can get this also in some direction going. And if you're interested to read more, we also will post the paper into the YouTube chat. I also included a link here to the shown to the paper as well. We also have a longer video online, so I think there are some ways to look into this. Right. So yeah, this was it actually from my side. And thanks again to you, Thomas, for having your concept on privacy presented. And now I would like to hand over, also to welcome Mr. Wolfram Seidemann to the event, who will join us in the panel. And now I would hand over to David Tercero Lucas, who is one of our DEA associate team member and will basically do the moderations. And I just see, before we start, one last question in the chat is about the slides. So from my perspective, I'm very happy to share my slides afterwards. So you can contact us at the DEA or me personally via LinkedIn or Twitter. And for Thomas, maybe you can say if you also want to share your slides. But this is, of course, up to you. And now yeah.
No, that's fine. I mean, I only have pictures, but if someone still wants the slides, yes, no problem.
Okay. Great. And now I'm really handing over to you, David, who's moderating the panel.
Okay, so thank you so much, Jonas, also for your presentation, also Thomas for your presentation as well. Let me just quick introduce Dr. Seidemann, who is the CEO of G&D, Currency Technology GmbH. And as you all probably know, G&D has developed its own CBDC solution called Filia, that is currently employed for CBDC prototypes in Thailand and in Ghana. Okay, so let me just start the debate asking you, Dr. Seidemann, given that we have already listened to the proposals by Thomas and Jonas, about how to enable private payments with CBDC. Okay, so Dr. Seidemann, can you explain to the audience how you at G&D approach the aspect of privacy with your CBDC solution?
Yes, thank you, David, for this kind introduction, and good evening to everyone. Well, in fact, when we looked at the topic of central bank digital currency, we first tried to understand what are the requirements for a public form of digital payment. And in order to understand that, I think we need to look at the current form of public payment, which is cash. And cash comes with a lot of attributes which are highly welcomed by the society, and therefore is a very used instrument around the globe. And Jonas, I think you're right. In some economies, we see the convenience of digital instruments getting more attraction and more traction, but still life is, or cash is very much live and kicking around the globe. As you could see in the pandemic, cash in circulation actually has grown a lot, and there are good reasons for it. But cash comes with also one disadvantage, which is it cannot be used in digital business model. So what we try to do is to really develop a solution that carries the benefits of cash into the digital age and create a digital form of cash. And that new form of money, CBDC, I think we have a fantastic historic choice now to develop the money of the future. And that means it has to work in all possible markets. It has to work in a very simple way, person to person. And for us, offline payment was one of the key requirements that we wanted to implement as well. And at the other extreme, it has to work in new markets that are currently developing and where a lot of new business models will come up in the future that we may not know yet. Think about machine-to-machine payment, think about money streaming, think about a lot of different applications where additional products and services may be attractive for businesses and users. So we want to have a platform where the value is issued by the central bank, who is the guardian of the currency, but that can be then used as basis for innovative service by everyone, even without being dependent from the central bank. So that's the fantastic situation that we have today with cash as well. Cash is the only instrument that makes the user independent from the issuer. Everyone can use it. And so we want to create and we actually made great progress and are, as you said now, testing this proof of concept of Filia, moving it into pilot projects, where you can achieve this full span of use cases and potential markets.
Okay, so thank you so much, Dr. Seidemann. Probably there are going to be a lot of questions about this project in the chat that we will tackle later on. Okay, but first let me start by asking, for instance, to Thomas Moser a question that I think that is more or less relevant, because 1 year ago the Bank of England's fintech director Tom Mutton said in a speech that privacy was non-negotiable for a retail CBDC. And let me quote the sentence that Mr. Mutton said. He said that privacy must be preserved. Privacy is not negotiable, and it is essential to trust in money, and there must be a clear consensus for how society's expectations of privacy will be safeguarded. So from your perspective, Dr. Moser, is privacy indeed non-negotiable for a CBDC?
Yeah, I think that the issue really is, what do you mean by privacy? So I think all central banks clearly would say, yes, privacy is important, but you can have very different perspectives on privacy. If you listen to some central bankers, they say, you know, the CBDC should protect the privacy of the user against commercial interests, against the big techs, the Facebooks and so on. You know, that's, I think, what I hear a little bit from the ECB. Then you have others who say, no, we want privacy from the state, from the central bank, actually. So that's one thing. And then the other thing is there are different degrees of privacy. You know, you can have full anonymity. That's basically what we try to show. Or you can have privacy in the sense that your data is confidential. You entrust your data to someone. So I think there are really different views out there. There will be some form of privacy, you know, but I think the degrees of privacy will really differ from central bank to central bank. And it's also clear that I think some of the law enforcement institutions would really also like this as an opportunity to get a much tighter grip on anti-money laundering or generally illicit use of finance. So I think there will be, exactly to get that balance right, will be extremely important and will be also extremely interesting. But you know, Wolfram said it's a historic opportunity to basically redo the cash. I think it's also a historic opportunity maybe to think then in the next step about doing AML, CFT, and all these compliance issues better, in a better way, and maybe achieve better results while at the same time being less intrusive. So that's, I think, really an interesting opportunity.
I think that I agree. But Jonas or Wolfram, do you agree? Would you like to share your own thoughts about it?
Yeah, sure. So maybe building on what Thomas said, I think it's really essential to understand that there is so many different degrees of privacy. I mean, when you also look at some ECB reports about the testing of the digital euro, they kind of tested perfect, fully private, anonymous, and also quite transparent means of payment. So this kind of array is really diverse. And I think one should think this a little bit more from the use case perspective, because what the central bank, the ECB, for example, and this is like also the focus we are having, what they do is they currently investigate in the investigation phase what the digital euro should look like, right? Which use case it should address. And I think here it's really essential to have an innovative payment infrastructure that is in some dimension better than the ones we already have. Because what I think, it's not necessary currently to have, for example, a PayPal at 2.0, where the only difference is like the issuer. So I think that we need more, that we need to have a clear, unique selling proposition, something which makes the CBDC better in some dimension that the means of payment we have today. And this can be cash-like privacy, but it can also be other aspects as, for example, programmability, or maybe a means of payments which can be transacted in an online and an offline way. This is also something we don't have today. So I would say it depends on the use cases, but it's a really important dimension of this.
I think you have a very important point here, Jonas. It doesn't make sense for a central bank to copy existing digital payment systems, because then central banks would compete in an area where the private sector already has established best practice, and that wouldn't make sense. So there has to be a unique positioning of a CBDC. And I already mentioned that we strongly believe that means CBDC needs to be the full inclusive solution, because only the central bank is guided by public interest. All the other proposals out are driven by profit interests. So that means they only target a segment of the market. The central bank needs to target the entire population and the entire economy and all markets. And that means if we design it properly, we have to also address all possible use cases in order to achieve full financial digital inclusion. And I would come back to that point that you asked before, David, on privacy versus transparency. I'm more on that side to say privacy is not negotiable. And I would like to offer a solution that is private by design. But of course, on the other hand, we need to also take care of governance and ensure that established processes can be also applied to digital cash, or as Thomas is proposing, even improve those processes of anti-money laundering and compliance. But the solution to this is not to see both as two antipodes, but as two different layers. So in our solution, Filia, we separate the payment layer from the compliance layer. And with that, we can create kind of a scalable privacy or transparency. So we offer a full private journey for lower amounts, where no data is even collected, because that's the strongest non-negotiable position of privacy. And at the same time, of course, we need to take care of governance. And that means if it comes to higher transaction values, we need to do a registered journey. And here, the existing financial system has established good processes. And similar as Thomas presented in his paper, we also think that the commercial banks need to stay engaged and do the know your customer procedures. And if you want to trade with higher values, you need to have a registered wallet that, in case of a fraud, would enable the authorities to go to the commercial bank and ask which person is actually behind that ID number of the wallet that is participating in a registered payment. That, of course, goes only with law enforcement or court decision. So the central bank per se, who has no interest in that data, in the personal data, also doesn't need to have that. So with that approach, I think we can solve that paradox.
Okay, thank you so much for this answer. And I think it is quite related to the following question, because apart from the previous sentence that I have mentioned from Mr. Mouton, he also said or highlighted that at the same time, privacy does not have to mean anonymity. And I think that this is key. Let me quote here an article of David Birch, because he pointed out that we should make an important distinction between then privacy and anonymity. And according to him, he said that in the world of cryptocurrency, anonymity is unconditional. That means, according to him, that it is computationally infeasible to discover the link between a person in the real world and value online. While privacy is conditional, it means that the link is hidden by some third party, for instance, like a bank, and not disclosed unless certain criteria are met. Let me just address this question to you, Dr. Moser. Do you share this view? What are your thoughts about it?
See, I mean, I'm not there are different, as I said, definitions of privacy, but the way I would define it is, and I'm coming more from like a data or data science perspective, I would say there are different degrees of privacy, and the strongest one is clearly anonymity. That means that no data is collected, there is no data to be had. Then I would say the next degree is pseudonymity, and that's actually what Bitcoin is. You know, a lot of people say or claim that you can make Bitcoin payments anonymous. You can't. It's pseudonymous, which means it's like the old Swiss number bank accounts. I mean, there is some kind of an identity there. The identity is the public key that's on the ledger. And of course, you can be very careful and make sure that no one can link that identity, that pseudonym, to your real identity. But even then, you know, you can still analyze the payments. I mean, there are a lot of different ways that you, of course, take a new key every time and so on. But I mean, and it has been shown by a lot of researchers, even if it's pseudonymous, you can find out some attributes of the person, even if you don't know who the person is. You can find out that the person likes this, or the person most likely does this, and you can start discriminating and using this information. So that's clearly a smaller degree of privacy. And then there is the smallest degree of privacy is just confidentiality. When you entrust someone your data, and that's basically what we do nowadays with our financial data. Our banks, they know what we do, but a lot of people, you know, are not that worried that their bank knows what kind of payments they do. They are worried that the state knows. So with the banks, it's at least decentralized. You know, the bank just has a certain picture. I think what people are worried about is that some central institution has all the data and can also combine that with other data, and then you can find out quite a bit about a person. So that's how I would see it. Yeah,
if Jonas or Dr. Seidemann would like to share any thoughts about it, or?
Yeah, to build on this, I actually agree with Thomas 100%. Again, it depends on the definition. I mean, I think what's quite nice to see with all our three solutions, technology is ready to do it. And the technology is here to also provide full anonymity. But the question is in the end, what the regulator kind of wants and what the central bank wants. And yeah, I think this is something we will see in the very near future, how this privacy / anonymity / confidentiality will be really materialized.
Okay, so let me now, well, if you want to say something there, Dr. Seidemann.
Well, I just want to add that, in fact, it's an important topic which also requires a political debate, because it's about the values and the political system that we would like to live in. So it's not a question of the central bank, but it's also a question of the parliaments. And we should engage more into that political debate, how we want to create our future we want to live in. And so I think it's good that we address that topic. Technically, a lot is possible. We shouldn't underestimate what Thomas Moser said, the power of artificial intelligence and data analytics, as well as also the behavior of people who want to pay anonymous, but then post a picture of themselves with their location, what they just bought. So perception is reality. Therefore, we need to take care of that. But after all, it's also a political debate on how we want to design this future.
Yeah. Okay, so thank you. And I continue with you, Dr. Seidemann. I think that we all may agree that the balance should be struck between allowing a certain degree of privacy in CBDC payments and ensuring compliance with regulations. Regulations that, you know, aimed at tackling money laundering and the finance of terrorism. In the most extreme case, fully private CBDC payments could lead to a substantial increase in illicit activities. How can this issue of supporting illicit activities through a privacy-preserving CBDC be addressed? What are your opinions or your thoughts about it?
That's not an easy question to answer.
Yeah.
Because as we just debated, we should not put society under general suspicion. Also, if you look at today's public payment instrument, which is cash, there are a lot of studies analyzing that there is no correlation between cash and crime. Criminals don't need to have that instrument to do their business. Even there are studies where researchers went into prisons talking to criminals, asking them whether they need cash for their business, and they're laughing at them. So I think we have to find a good balance of offering a payment system that ensures privacy to the honest user, and that's the majority, but then have that compliance layer that allows to identify if there are suspicious activities. And then we should have processes that under certain circumstances allow then law enforcement to engage. Then the technology will, of course, give the opportunity then to have more data and analyze data to solve these issues. But I believe for the person that is interested to buy some medicine at the pharmacy, it's important to offer a true private instrument that allows the person to feel comfortable. And that's why we need to tackle or take care of both elements.
Yeah. So trying to open in the debate a little bit, Jonas or Thomas, the first one that you prefer to talk about it.
Yeah, I mean, I fully agree with what Wolfram said, and I think there are two important things that he said that maybe I rephrase. Is one is that, you know, the assumption that privacy means that you have something to hide, something bad to hide. I think that should really get, you know, something that has to be clearly said. That has nothing to do with that. You know, you want your privacy not because you have something bad to hide. I mean, all of us, or I guess most of us, have curtains in front of our windows, and it's not because we do something bad in our apartment or in our house, but we want some privacy. You want privacy when you vote. You don't want other people necessarily to know how you vote, not because it's something bad that you do, but it's because it's important. And that's the second point that Wolfram also said. It's not just important from an individual point of view. It's important from a societal point of view. For the, you know, as a democratic, free society relies on privacy and has to protect the privacy of people who are not abusing it. But then, of course, there's always the problem that some people then abuse this privacy for illicit behavior, and that the really difficult thing is to get this right balance to kind of not allow this illicit behavior, at the same time protect the privacy, which is important for individuals and for society as a whole.
Yeah, maybe building on what Thomas and Wolfram said, I fully agree. And I think, Wolfram, your argument was really good to say we need a political debate about it, because what we currently see is that we have the debate when it comes to cash payments, right? So which seems kind of going into the other direction, that you want a European limit on cash payments, right? So it's rather, and this is also what data kind of show, that these limits for, I mean, if you remember how cash payments today work, here again in Germany, we have a threshold approach. So we can transact with cash in a fully private way until a specific amount of money. And if you exceed this threshold, then you have to provide your ID. And this threshold has been basically lowered for the last decades, and indicating, from my perspective, kind of the wrong direction when it comes to privacy. But nevertheless, I think this is really a good point now to start about the future of privacy, not just with cash, but with the financial system in general, or CBDC in particular. Because, and this is also why I personally like the approach we used, namely the threshold, because this can be, for example, an account balance threshold, a turnover limit threshold, whatever the regulator says, and we just have to insert a number. But this clearly should be a regulatory process, and nothing just set by the central bank or us, like having the research on the system, because we cannot judge it. So it really needs a debate about it. And this is, I think, why this threshold process makes sense, because we kind of just replicate cash as we know it today. So as I said, we have this limit already today. We have it then with CBDC as well. And I mean, I wouldn't say I disagree, but we just handle it differently. That different as what you, Wolfram, said, that we have like a bank, for example, that supervises that money laundering restrictions have been basically complied with. But we just say we have a threshold, and if below the threshold some transfer take place, that law enforcement just doesn't care because it's too low, right? So again, kind of looking how cash does it today. But yeah, here again, plenty of ways, and I really would like also this event today to get this privacy aspect on the agenda, and also to kind of bring the political debate about this on top.
Okay, so thank you, Jonas. Now, Dr. Moser, in some studies, it has been shown for citizens that there seems to be the so-called privacy paradox. That means that citizens see privacy as essential, but then they don't really behave in a privacy-preserving manner. Okay, for example, everyone wants to have privacy, but they use social media, networks, or big techs, which sometimes they don't really behave in a kind of very privacy-preserving attitude. So, according to you, what does this privacy paradox imply for CBDC?
Yeah, no, I mean, that's a good point. And Jonas pointed out these surveys that have been done by the ECB, but also by the Bank of England. And as he showed, people said, you know, we want privacy. And then, of course, as you said, some people point out, well, why are you all on Facebook posting your pictures if you want privacy? I think one problem or one solution to this paradox is that a lot of times people do not realize how much privacy they give up. You know, I think a lot of people, I mean, if you post something on Facebook, you're fully aware that this is not private. I think the problem starts there when you're not aware of it. If you make a payment, and your data is collected, and especially your data is then sold to another party and used for other purposes. And I think a lot of people still don't realize how that is almost regularly done. And also what we talked about, the data science, you know, artificial intelligence, just the possibilities that you have today with combining the data and then really finding out a lot. And I think if people would be more aware, and that's starting slowly, you know, knowing what the big techs really know, what Google knows about us, just from our searches. I think people start realizing that, and the more people realize that, the more concerned they are. That's what I'm convinced of. The other thing is, you know, people are ready to give up privacy for convenience. But the important point is they have to get something for it. So I would assume that some people say, okay, you know, if I sell my data to a commercial enterprise, but that's important that they, in the first place, have to own the data. And I think that's also what's important for a CBDC, by just providing the option, you know, like nowadays with cash, you say to people, okay, if you want to be totally private, we have a solution here. That increases the data ownership and the power of the consumer. And that then forces that the commercial companies, if they want the data, they have to give you something for it. And I think it makes a level playing field. And that's why it's important just to have the option, just to give people a private payment option. If they use it or not, that's up to them, but at least they have an option. That's why I think it's very important to have privacy in a CBDC.
Yeah, thank you for your answer. I don't know if Jonas or Dr. Seidemann would like to share their thoughts about it.
I can only support what Thomas said. To offer the option, I think, is key. Today, if you want to pay digital, you are forced to enter into a third-party contract. And that is the attractiveness of CBDC, that this will be a digital public payment system. So allowing two parties to settle without any third party involved. And I think that is really a strong value proposition that we want to create. And of course, that needs to respect the privacy of the two parties.
Yeah, I fully agree again. It's really about the option. Today we have cash. In the future, maybe it's not that heavily used anymore, and we should have the option. And if what Thomas said is completely right, there are lots of people that would kind of sell their data, or if they get a discount of 2%, would pay by distributing all their data. And this is fine. This is fine. Really no issue. But I think there should be the option to remain private. And I think this is definitely something we can agree in this panel.
Okay, thank you, Jonas. And now continuing with you, do you think that or should central banks follow a privacy by design approach? that it's an approach where the technical infrastructure ensures privacy by design, and there is no need to trust the central bank regarding privacy. What do you think, Jonas?
Yeah, thanks for the question, David. So I think, again, as I stressed in the beginning, it depends on the use case. So where the central bank sees the USP. So if the central bank says the USP is that it's an online and offline payment system, or that it allows for programmability, I think you don't need privacy by design. But if the central bank really says the USP is privacy, then I think it should be a privacy by design solution, or we also labeled in our paper trustless privacy, that you do not have to trust the central bank that they will not sell the data or not do anything with the data. Because also what Wolfram and Thomas said, we have artificial intelligence being pretty smart these days, right? And we have seen with the crypto kind of stories that these pseudonyms can basically be traced back to the person. And this is, I think, it should be a way there where no data, no confidential data are really stored. As I said, when the use case is really having a digital cash, having something that is as private as cash.
Yeah, at this time, I would like to open the debate here. If some of you would like to say something about it. Dr. Moser.
I could jump in. So I mean, I think what is very important is that the central banks think about these privacy issues right from the beginning. I mean, that's kind of also I think a possible definition of privacy by design. It shouldn't be an afterthought. And I think it's a very good the example was during the COVID crisis, these tracing apps. And you saw real differences. Some states really took privacy seriously. Most did not. And you also saw that the people didn't really like these apps. So for instance, the take-up in Switzerland was extremely low because people were worried, what happens to this data? And I think for central banks to launch a successful CBDC, they have to explain at least what happens to the data. And so they really have, the people have to adopt it. I mean, the option is also people don't have to use it. If they don't trust that their data is handled well, they will not adopt it. So in that sense, the proposal we made is privacy by design and actually also privacy by default. So it goes full way on these design principles.
Yeah, I also opt for privacy by design because it's such a strong concept which will drive acceptance of CBDC. And we were involved in a study that OMFIF did on the question of trust in digital payments. And here, the response that was collected in 13 countries clearly supported the trust in the central bank as an issuer of currency. And the reason why there is trust into the central bank is because the user of the currency can use it independently of the issuer. So that is a by design system which leads to the high acceptance of public payment. And I believe in the digital space, we should have a similar construct that, yes, people trust the central bank. They trust that they also act in terms of public interest. They are also not politically bound because central banks are independent, and therefore they are the institution that actually offers the most trust into it. And if then on top, the value proposition is also a CBDC solution that is private by design, that would drive acceptance.
Yeah, thank you, Dr. Seidemann, for your answer. And I think that I agree with all that what you have said. And now changing a little bit the topic, but this is an open question to the three of you. Which types of technology do you think that can ensure a high degree of data privacy? And now, it's a DLT, so distributed ledger technology, a viable solution? Should you employ a software-based or a hardware-based solution? What do you think? The first one, who would like to answer?
Well, I can start. Now we get into the issues where we disagree, so it's getting interesting. So in our case, I mean, we don't use a DLT. Why don't we use a DLT? We are not that we have something against DLT, but the reason is that we said, let's keep it as simple as possible. privacy is easier to achieve without DLT, and it's much more scalable. You know, if you want to have a national payments system, if you just go centrally issued, it's extremely simple. So in that sense, you know, I mean, I don't say that DLT can get there, but I think there's still a lot of research needed to make a DLT both scalable. And then, I mean, I very much like Jonas's approach with zero knowledge proof. But that's, I mean, there's a lot of research going on with zero knowledge proofs. It's extremely interesting. I'm also very interested in that. But and it's getting better and better. But there is also still an issue of efficiency. You know, those to make the proofs. You still need quite some computation, less and less and less, and they are getting there. But for that reason, we said no DLT. And we use a very simple cryptographic scheme that has been around for a long time, which just makes it simple and very fast. So that's the reasons why we didn't use DLT. And maybe hardware, so our solution is only software. I mean, the disadvantage of that, it's only usable when you're online. So we do not have an offline solution, which you could, of course, as soon as you use hardware tokens, you can basically also have an offline solution. We also said, you know, security. So this is, you know, not unsolvable, but it makes it more complicated because there are, you know, to have something that is really not breakable, a chip that is not breakable, makes it much more difficult. So we just went for the simplest design possible, efficient and simple.
Well, don't be so humble, Mr. Moser. It's not as simple because it's already catering for post-quantum cryptography. So it's quite a clever approach, to be honest. We went a bit further because we wanted to address the offline payment situation as well. And we want to offer consecutive offline payments, which is even one complexity higher. And therefore, you need a combination of software and hardware solution, because we need to offer a secure environment in which an offline payment can take place before then eventually a user goes online and reconciles the entire system. And to the question of DLT, well, you could give a philosophical answer, or you could give a performance-related answer. The philosophical one is a DLT is an interesting approach to solve the double spending problem. And this happens through the trust in the algorithm instead of the trust in the institution. But since we debated just now, we have trust in the central bank to issue currency. So we don't need to replace it with an algorithm that nobody understands either. So I believe philosophically, DLT may be the wrong approach. And also in order to solve the double spending in DLT, you basically trace the history of transactions, which is kind of a challenge if it comes to privacy. So in our case, since I already explained, we are solving the issues by looking at different layers. We experimented also with DLT at a certain layer because DLT comes with good mechanism to synchronize decentralized databases. However, the performance is not there yet. So Filia currently is implemented on a database solution, which can be distributed, because if you want to address a larger territory or a larger currency, it's wise to have redundancy, and therefore there needs to be distributed systems. But the performance of DLT is not there yet to cope with the transaction volumes that we need in order to cover a currency in a digital space.
Yeah, here again, even if we have completely different approaches, I think we again kind of agree. So here I thought we would strongly disagree. So to kind of set the scene, so for our approach, we kind of, as Thomas said, we used zero knowledge proofs, and this was strongly inspired by Zcash, right? So some crypto privacy coin, which is based on DLT. But what we basically decided in the end is to use this kind of cryptographic tool in a centralized setting. So also we are not using a DLT because we said in the beginning it was of course easier. Also the scalability issues which has been mentioned. So we thought in the euro area context, it's currently in this setup, makes sense to rely on the centralized ledger. However, I also mentioned in my presentation beforehand, if there is a central bank that says there is a use case for using a DLT, and we do see the central banks. I mean, if we look in the Bahamas, the cent dollar is based on a DLT, and also the CBDC in the Eastern Caribbean region is based on a DLT, right? Because you kind of, as Wolfram said, the redundancy can also be a good thing when it comes to natural disasters, to resilience. But as I said, we decided to build it on a centralized ledger. It could also work on a DLT, but maybe last but not least, why not hardware on software? And I think this is a valid point. What Wolfram made is this offline payment aspects, because with our approach following Thomas, it's not possible to do offline payments. So at least currently. So if the idea of a central bank is we want to have central bank offline payments for sure, and also permanent offline payments, and Wolfram said, then a hardware solution could make more sense. We in the end decided to use a software one because we have also seen that there are some issues with hardware solutions as with any technology. So that it could get compromised, also that the manufacturing of these secure elements is not, or at least from our research, seems not to be that well established in the euro area, which could induce further dependencies. So I think both approaches have their pros and cons. Yeah, Wolfram?
Here we disagree.
Okay.
So the technology is well advanced actually to offer a secure environment. Of course, you have to observe the technological advances in hardware as well. So I would see a similar model as we see today in existing card-based payment systems, where a credit card has a certain validity. And that makes sense because you need to observe the hardware mechanism and upgrade the security from time to time. But same is also true for the software solutions. Yeah. You have to have an agile crypto approach in order to always keep up with the latest cybercrime challenge. And that is valid for hardware as well. But the processes that the industry can offer are strong enough to also ensure the security of a CBDC.
And maybe last from my side, what I also really like is that if you look at the experiments the ECB is doing, that all kind of solutions are tested. So the ones basically, I mean, not our ones currently also with Thomas, but that kind of software solutions are tested, hardware solutions are tested, DLT is tested, non-DLT is tested. And I think this is the direction to go, to see how the systems works, and then in the end to decide which one addresses the use case best, right? To just have a fair chance for all the technologies and the solutions, and to have like the kind of best one in the end being selected when it comes to the digital euro.
Okay, thank you, the three of you for your answers. And let me now, we are in the last 15 minutes, so let me now go to the Q&A session. Let me read you a couple of questions that we have here in the chat. The first one is there any proposal for a CBDC which would be anonymous and would have the ability to be exchanged offline? Who is the okay, yeah.
I have to raise my hand here since GND Filia is actually complying with that requirements.
Yes.
We offer anonymous transactions within defined frameworks and also ensure compliance with existing regulations. And also we offer a consecutive offline solution. So that means from a user perspective, how does it look like? You can either use a wallet on a smartphone, or you could integrate even a smart wallet into a automated supply chain or smart contract if it is an automated digital model. But you can also use the same CBDC with a simple card or variable where you can offer payment from person to person, even without connectivity in an offline environment, or even with a battery-driven device without power supply. So we want to address all markets and all use cases. The central bank is issuing the platform, and upon that platform, many use cases can be developed.
Yeah. Okay, thank you. And let me now go to Dr. Moser. Is this GNU Taylor system operational anywhere or planned to be operational anytime soon?
See, at this stage, so the Christian Grotthof is a computer science professor at the University of Applied Sciences in Bern, and it's actually operational in the cafeteria of the university. I used it. You can pay with Knuthaler there. I mean, there's no country so far that has implemented that. But as I said, first of all, it's open source. So if you want to use it, or contact Christian Grotthof. He would be ready to help. He also set up a company that actually could implement it if anyone is interested in it.
Okay. Cool. Thank you for your answer. And maybe, I don't know if this one you can really answer it, but did you present these solutions to central banks? I get that, well, Dr. Seidemann is working with the Bank of Ghana and also the Bank of Thailand. So yes, but apart from that, would you like to say something about it?
Well, in fact, we are discussing with many central banks around the globe. We did, since the beginning of this year, over 50 workshops to look deeper into these concepts and discuss with central banks how parameters could be set and how the solution could be further developed. And but it's not up to me to announce. This is more the central banks that need to talk about that, and so therefore I can't disclose any other bank.
Absolutely.
Maybe to add on how it worked for us. So of course we have just been a group of academics, so it's of course not that easily doable for us to pitch this a lot. But we were really thrilled that there were several central banks that have been interested in our approach, and we are also in advanced discussions with some of them. And I personally have to say, in the beginning, I wouldn't say surprised, but I was happy about how open the central banks were to this privacy by design and this trustless privacy, because this in the end really means that the central bank cannot access any data like what happens on our private CBDC accounts, right? But so this is to the second part of the question. So they react actually in a more optimistic manner than I actually expected, and but I'm also of course I cannot reveal any names of central banks.
Yeah, Dr. Moser, yeah.
Same here. I mean, we were relatively early, so I guess when we presented it, that was about 2 years ago. A lot of times the answer we got is, why is there no DLT? We want a DLT. I guess that was at the height of the DLT hype. But so yeah, we did present it. I mean, central banks are looking into different designs. There's a lot going on. There are pilots going on. So it will be interesting to see what's coming out of that.
Okay, and now we have a question for Jonas. How does the user technicability prove that he is not exceeding the limit? Also in regard of potential attacking, manipulating the zero knowledge proof. So Jonas.
Yeah, that's really a good question. So what we did is we implemented two different kind of limits. So we basically implemented a kind of balance limit. So that means that you're just allowed to hold a maximum amount of CBDC in your balance on the privacy pool. So this is the private payment rail. And besides this balance limit, we also have a turnover limit. And how this is implemented actually quite easily. So it's just a counter. So we basically count how much funds a person basically has done in a specific month, but this is just done in the internal wallet on the phone, and this is no data which is distributed to the central bank. So for the central bank, only the proof itself is provided, therefore not somehow undermining in privacy. So as I said, just a counter. This could also be extended if you want the people from the euro area to have another limit as people not from the euro area, or merchants having different limits than individuals. This can also be enabled, but in very brief, this is how we design it. But for more, I'm very happy also to refer to our paper where we talk about this in detail.
Now a question to Dr. Seidemann. Can you elaborate on the underlying technology you use to protect privacy?
Well, it's cryptography.
Yeah, that's...
Yeah, but going a little bit further into that, what we basically do is we define a format which represents the value. And then we have a one-way function which creates a anchor to prove that this is a genuine note or genuine value, genuine coin. And we also use zero-knowledge proof to ensure that if there's an operation, that if you split the coin, that you don't create out of a 10, you don't create a 20 and a minus 10. And we offer the user the possibility to verify that the coin she or he received is a genuine value, which is deducted from a original file that has been issued by the central bank. So it will be, of course, signed by the central bank for issuance, and that has even if it has undergone various operations like merge or split, it can be proved that it's a genuine value. So if anyone is interested deeper into how it works, should send me an email and we can get into an exchange. But in principle, as I said before, we are delayering the issues, the problems. Payment is one layer, authentication is another layer. And that's what we have implemented there.
Thank you for your answer. And let me just go to the final questions. So this one to the one of you that you prefer. Here they ask, which are the benefits of offline solutions, and if there is no power, but cash fails. Okay, if there is no power, cash fails. If a tornado hits, this person wonders, connectivity is lost, but power remains.
Yeah, but you could do that even battery driven. So if you make CBDC a legal tender, you have to offer acceptance by all means. And that means if you want to transfer value from one device to another device, you can just slide it into a battery-driven system with a keypad, and you hold the other cards to it, and you can transfer from one card to the other. Yeah. So we believe that this is a solution that can actually work even in disaster situations.
See, maybe I add from our side, our position was that we would advise central banks not to give up cash, and that cash is the perfect offline solution. So if you need an offline situation, then you use banknotes. What is really needed is a private online solution, and that's what the CBDC would be here for, including for paying on the internet, online payments. You know, when you buy something somewhere on the internet.
Yeah, Jonas, if you would like to say something about it.
Yeah, I think there's everything been said. So here again, it depends on the use case. As Thomas said, if there is cash, I actually like cash. I pay everything with cash. So I would also like not to give up cash, but of course there are also some reasons why people don't use cash, because I mean it's kind of inefficient, or people, at least the young people, prefer then to not use a wallet, bring a wallet with you, just have the phone, right? It's not myself, as I said, because I'm using cash, but I see why cash is not always perfectly convenient. So again, referring this back to the use case discussion we already had.
And now probably the final questions that is addressed to Dr. Seidemann, but I think that the three of you can really try to answer, because it is a little bit difficult, is how can central banks manage the cash cycle or the CBDC cycle in the same time and balance the issuing of both currencies versus the market needs?
Well, normally Thomas should answer that. He's the central banker, but yeah. I try to give it a simple one. For me, CBDC and cash is part of M0. So it's the same instrument in a different format. And if a user is going to an ATM to withdraw cash, that cash came from the central bank via armored trucks to a commercial bank and was put into an ATM. If you download instead of that digital cash from your mobile app or payment app, that cash or that digital value has been created by the central bank and has been sent to the commercial bank into their digital vault by a secure communication line. So it's more or less the same instruments, but in a different format.
Yeah. Dr. Moser?
I mean, I would agree with that. If you really design it like banknotes, like cash, then it shouldn't really be any different. What central banks worry about is that all people would or could at least empty their commercial bank accounts and switch those into CBDC. You know, that's what's often termed the fear of disintermediating the banking sector. But I think that's exactly when you design it like a banknote, and in our case and in some other cases, if you actually distribute it like banknotes through the banking system, then I think that risk should be relatively low. And there are also other means to prevent that, like having limits or using tiered interest rates. There are a couple of papers out there. You can handle it. It's a question of design.
Maybe just add one sentence. I think most of the aspects have been brought. I mean, CBDC as well as cash is demand driven, right? So it's the end what the clients want or what the bank demands basically for the clients. So there is no need to provide this beforehand. So it's basically just demand. And I agree that the process, is, at least how it currently looks like, is very similar to CBDC compared to how cash works. It works today, also having banks some kind of involvement there.
So thank you so much, the three of you, for this really interesting debate. We have missed some questions regarding the programmability of money, also the risk of privacy and CBDC, but I think that probably we can address them in another debate or in following this discussion. So Jonas, feel free if you want to say a final word.
Yeah, sure. So thank you very much for participating. So to Wolfram, to Thomas, also to you, David, for the excellent moderation. Also, of course, thanks to everybody for joining. I mean, the questions were also remarkable. We were not able to address all of them, but I think you can also reach out to us individually if you have specific questions for us, at least for myself. I'm very happy to address this bilaterally as well. So thanks for joining this event. If you want to be up to date when it comes to the Digital Euro Association, we just posted the newsletter link in the beginning. So just follow us. We have events every 4 to 6 weeks. The next one again on stablecoins and tokenized commercial bank money, so not CBDC, somewhere in October, will be announced soon. But yeah, feel free also to reach out if you have to us if you have any questions. And again, thank you very much for taking the time. Now it's kind of late evening, at least here in Germany. So thanks for taking the time for everybody. And yeah, was really a pleasure and a very interesting panel. Thank you very much.
Thanks. Bye.
Thank you, Jonas.
Bye-bye.
Thank you. Bye-bye.